The monthly candle is beginning to look quite bearish. Are the bulls going to be able to reclaim control and push the prices back over 30,000, or are we destined to see a collapse towards 25? Let's go ahead and jump into the charts. Okay, MegaWhale team, welcome back to the channel, guys. Thank you so much for tuning in. I hope you're all having a magnificent day. Start the week, a fresh week to get in and make some money. We're going to be talking about Bitcoin today on the higher time frames, discussing that monthly candle close. Obviously, we are slightly engulfing now our prior monthly candle. This is a sign of a rejection, a sign of a potential reversal, and it is not a very good look. For Bitcoin to negate this, we are going to need to see that monthly candle close above 30,000, and we'll discuss that in today's video. We'll also talk about the daily trend, how weakness is being shown, what we expect next, and of course, the current price structure. We'll also go ahead and talk about the short-term price action, the breakdown from our channel, our next targets, what will potentially trigger a breakdown further to 25.2K, or a break above 30,000, and of course, while we do all of that, we'll run through the technicals and structural levels. Now, before we get into it, smash the like button, hit the comment button, and of course, guys, subscribe to the channel. We do daily videos focusing on technical analysis, market structures, candlestick patterns, so much more. The market data, liquidation zones, we teach you how to trade. We teach you everything you need to know in these videos to monitor, assess, and keep up with the price action, even make profit along the way. We cut out all the emotion, cut out all the bullshit, and cut out, guys, all of that unnecessary emotion-driven manipulation that every other channel seems to be doing. We are purely focusing on the data and the structures. We don't care what we think, what we feel. We tell you what the charts are saying. If that's the kind of stuff you like, subscribe. We do daily videos. You can also find us on Telegram. Updates, charts, analysis, information, videos, educational posts, news events, everything here. Second link down below. If you're interested in our VIP channel, you get access to this channel over here. We post daily trading signals. Look at all these profits we're making here, guys. We post exact entries, exact targets, exact stop losses, exclusive charts, analysis, trading plans, educational posts. We even have a group chat. In our group chat, you get access to our trading and chart chat. We post information, educational posts. We teach you guys how to trade. We share our trades and so much more. A help chat to help you guys out. We have altcoin analyses and of course a general chat. So much. Contact me to join. You can get access to all of this via the pinned comment in the free channel. Let's go ahead and get stuck into the market data and then we'll get into the video. Market data, how are we looking currently for the month? Let's take a look. Down 3.3%. Sell in May and go away. It seems like it's coming true. We're down 3.3%. Liquidations are up 1.8, pushing over 130 million. Very high in liquidations. And of course, 24-hour volume is down 15.8%. So it's dropping a little bit. Pretty interesting to see. We don't have a lot of new money coming to the market. We don't have a lot of volume in the market. But a lot of these trapped positions are now being liquidated. A lot of these trapped positions were longs. Like I said already, people were stacking longs in this upper region over here. There were whole heaps of high leverage, low margin longs being taken in this position right at resistance. We were actually taking shorts from here onwards. A lot of the market were taking longs. A lot of these people have now been liquidated. And that's why we're seeing this liquidation data jump up. As for volatility, 2.92 on the 60, for the 30, 2.25, slightly increasing, but not too much. And as for the liquidation data, we'll go ahead and show you now. We can see basically 90% of these liquidations have been actually from long positions. We'll go to a 15-minute scale. You can see we had about $80 million in longs liquidate in the last 2 or 3 hours. Absolutely unreal stuff, guys. These longs have been absolutely pinched. Let's go ahead and get into the DXY. DXY, interesting, guys. The DXY is struggling here. We are still in that support range, so I'm not really expecting too much. And like I said, I don't really expect too much until CPI data comes out. We have CPI data coming out in about 2 days and 12 hours. That is going to be a pretty big news event, as it's going to determine basically the leading bit of information in regards to what interest rates are going to do. We know interest rates are more or less slowing down. The rate of growth is decreasing. We're coming closer to a pause and an eventual pivot. But at any point, if inflation data indicates inflation is actually rising again, that could shift the narrative and that could force interest rates back up. And again, as we already know, interest rates being being one of our key economic drivers and our key driver of risk asset price action. If interest rate, the forecasted interest rate change or the trajectory of which interest rates are going shift, that will change the macroeconomic position and particularly the systematic risk for risk assets, and it actually could drive asset prices down significantly. So we do have to keep that in mind. We are looking for CPI. We really do want to see CPI coming up good. We want to see good inflation data, because we don't want the markets to crash, guys. We're taking advantage of the drop. We bought at 16,500. We sold at 30,000. We've been taking advantage. We've been profiting the entire time, but we don't want the markets to crash. We want to see the 4-year cycle do well. We want to see the prices go up. It is much easier to trade an uptrending market than it is to trade these corrections. So, but again, what we want doesn't matter. The market doesn't care how we feel. We can look at the data. If the data comes out negative, CPI comes out bad, the markets are most likely going to crash, because they're going to try price in an anticipated higher interest rate or another 25 basis point hike in the future. So keep that in mind, guys. It just kicks the can down the road a little bit further. Of course, looking at the markets over here, if we do see the DXY drop, markets will rally. If we see the DXY rally, the markets will drop. Again, determining, or the direction will be determined by CPI. Looking at the traditional markets, we can see S&P 500 is still under this major 1 year long resistance zone, guys. It's a super important resistance, a 448 day long resistance over here. If we do break above this level, we are going to see a continuation back up. We could potentially push 4,300, potentially 4,400. If we don't, we are going to see that continuation downward, guys, to the uptrending support. And we already know, guys, we already know that these structures are bearish structures. As much as I like the look of the S&P 500, if we break above, we've seen this structure develop on Bitcoin. We've seen what happens. We can reflect that to the S&P. We can say, if we do lose this uptrend, we are going to continue down, guys, and that could take us back towards these lows. Here is the thing. This structure has about a 68% probability of breaking down. So there is still about a 32% probability that we invalidate this bearish structure, and to do so, we need to break above 4,300. So even if we break above this level, that doesn't invalidate the bearish structure. We do still have a uptrend that will develop on the short term, which could definitely give you a nice profit. But until we break this local top here, we are technically going to still be in this structure, which could eventually lead to a breakdown. Obviously, the longer it takes, the less significant that breakdown will become. If we break down right here, it's going to be more significant, as opposed to if we break above this resistance and then break down, as we will have a lower base of support. The same goes here for the Dow Jones. A very similar uptrending support line here, and a very similar neckline of resistance that we're looking for. Let's go ahead, guys, and get stuck into Bitcoin, the interesting stuff. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, there's a few things I want to talk about for Bitcoin today, and obviously a lot has happened in the price action in the last few days, and let's actually really emphasize really quickly what is going on the smaller time frame. We saw a rising channel formation. As you would know, if you were in this channel, if you're in our Telegram channel, guys, you would have known we've been talking about this rising channel for a very long time. We've been talking about it while it's been developing for the last few weeks, and more importantly, we've been shorting these tops, shorting these top points, expecting this breakdown. And we saw that breakdown occur. Absolutely phenomenal stuff. This was a bearish structure. It represented increasing price action within a weakening and exhaustion pattern. It was representing price exhaustion. These trends don't generally continue. We saw a breakdown. We have now come down to a support zone represented by this chunk of the VRPV. In fact, we retested it perfectly. Furthermore, we actually completed a measured move breakdown from this local neckline resistance right over here. You can see there's a little box over here, all the way down to retest that low. So the measured move, meaning the bearish move from this structure, has now completed. We've completed that move. The bearish move is over for the structure. The question is now, will we continue lower? or are we going to bounce? And that is what we're answering in our short-term analysis, but it's good to apply context to what is going on. So if we move back to the higher time frame, we can see a very particular level, the $30,000 to $28,000 level. And we know why 30,000 is incredibly important. We'll come back to, again, why it is so in just a moment. But $28,000 is equally as important because $28,000 represents the range low of the current yearly long resistance level, which was present as support in the prior bull run, okay? It represents the range low, it represents the low point of the resistance zone, and therefore it actually represents a pretty significant support, meaning if we lose that level, that is going to be validation for a drop below this support range or this resistance range, which could push us low. We'll talk about that in a second again. So looking at this higher time frame, we do very much see an overall uptrend, and we are still in an uptrend, guys, until we see three things occur. Number one, we need to see a break of 28,000. Inadvertently, if we break 28,000, we are going to be dropping below the 50 EMA. That is number one. Number two, we need to break through the midline of the Gaussian channel. And number three, we need to lose the base of support we have of this entire range, which is sitting above 27,000. We can zoom out over here. You can see we have a horizontal consolidation. Right over here, we have a deviation above. Our 27,000, 26,800 is our base support. If we lose that level, we enter a low volume range in the VRPV. This is an area of low resistance, in an area where volatility will increase, and thus the speed of price action will accelerate and the price will move down to our next support zone. Okay, so that is what we're looking for a breakdown on those points. When those things occur, we enter a downtrend. We are losing strength on the daily. However, the downtrend doesn't technically start on the weekly until 24.4 to 25.2K is lost. This is represented by an incredibly strong, equally as long support. This is about a 1 year long, a little bit shy of a year, but a 340-day long support level. If this level is lost, we will deviate below, meaning this area will be deviation, similar to what this area was, and we'll be pushed back into this consolidation sideways. If that occurs, we have lost this uptrend. We are in threat of moving lower. Very important stuff, guys. So let's do a quick TA and a structure analysis. If we break above $30,000, this will invalidate this weakness. We have a lot of weakness showing on the chart, and I'll show you the weakness right over here. We can see, according to our Marcus over B and our RSI, we have weakness. We have falling momentum. We have decreasing momentum here, represented by red dots. Shift in bearish momentum. We have actually crossed over into the bearish territory for the Marcus OB for momentum over here. So bearish momentum on Marcus OB, we have decreasing momentum on RSI, and we have weakness shown via our uptrend here on the price action of the price dropping into the Gaussian channel and retesting the lower range of support of the resistance range. All of this is signifying strong weakness. The price is at massive risk of a correction if we do not see a massive momentum shift very quickly, guys. We need to get the RSI above this trend line to flip the bearish metrics. The bearish metrics being, okay, volume, liquidity, velocity, speed, volume, liquidity, velocity, and speed. That's the metrics we're looking at. Sorry, we're looking at those metrics. What are these metrics determined by? Momentum. So momentum is essentially a reflection of volume, liquidity, velocity, and speed. All right, that's kind of what we're looking at. If we start to see this momentum point downwards, it tells us these metrics of price action are bearish. It tells us we have bearish metrics. Now, if we look at the strength of price action, how do we determine the strength of a price action? Well, we determine the strength of a price action via these metrics: velocity, volume, liquidity, speed, volatility. These metrics of price action we look for. So if we do see momentum is falling, we know these metrics are bearish, and therefore, how can we have strong price action, or how can we determine that the strength of a trend is positive if the descriptions or the metrics of what we determine the strength of the trend to be are negative? It shows a discrepancy, and these discrepancies are obviously bearish signs. So we do have a potential risk of a correction. We need to invalidate those metrics. We need the momentum to push upwards, therefore turning those metrics of price action bullish again, which will reflect the price strength turning bullish, and therefore the price will continue upwards. If we do continue upwards, we're looking for this next resistance range at 32,000. We're looking for 38,000 to 40,000. And finally, we are looking for the most important at 48 to 46,000. Those are the resistance ranges above us, okay? If we drop below and push lower, we'll reach these levels. We'll talk about when we go to the short term. So 30,000, 48,000, 40,000, 25,200. Why are these levels important? What is the macro chart saying? Well, like I said already, monthly candle close, guys. We closed under 30K, as you would know already. For the macro trend to flip bullish, for the trend to flip macro bullish. We're not talking about weekly and daily. We're talking about monthly. For the monthly trend to flip bullish, we need to close a monthly candle above the prior bull run yearly low support. Okay, this red line, you can see we actually rejected here. We sold on that deviation, and this current candle is underneath. You can see in prior cycles. Let me just zoom out. You can see in prior cycles, this yearly low has acted as a major macro trend trigger, meaning every single time we monthly candle above, we end up pushing to the dotted trend line. Monthly candle above, push to the dotted trend line. Where is the dotted trend line? It is $48,000. $48,000 being the major trigger for the bull run to basically kick off, to start increasing speed and velocity, momentum, volatility, all those things will kick off. If you look at the trend angle, guys, the trend angle from the bear market bottom to that close above the dotted trend line, in comparison to the dotted trend line close to the top, you can see the trend angle steepens. What does that represent? It represents increased velocity, increased volatility, increased momentum, increased speed, and obviously increased volume. All of those things put us into a bull run. We can see that every single time, guys, hands down, it is like clockwork, guys. Okay, so if we're looking at the same thing again, we know that if we break 48,000, that is going to be the trigger where all of that money comes back into the market and floods upwards and pushes to the new all-time high. It doesn't mean you can't get a solid rally. Like I said, we're not in a bull run. This entire range is not a bull run. We are in a bull run when three things happen: 48K breaks, date range trend breaks, and the Ichimoku cloud baseline breaks. That is when we're in a bull run. Until then, we are in a daily and weekly reversal pattern that has the potential to develop into a monthly uptrend, which could trigger a bull run later down the track. If we take a look furthermore at this chart, every single time we do close a monthly candle above this red line, we never actually close a monthly candle back below it. We never close a monthly candle back below it, and therefore is a strong trigger for a macro uptrend. Let's take a look at this chart. There's one thing of massive warning I want to take a look at, which is that 62 on RSI. We talked about this yesterday. Every single time, guys, we see a break down from the 62 on the RSI on the weekly chart, you can see here, we end up seeing a massive, massive correction. Now, this is actually quite concerning considering where Bitcoin is actually currently sitting. And usually I wouldn't be too concerned about this kind of stuff because I do know the trend is very strong, but this could actually be quite concerning. I'm not trying to scare anyone, but this is quite concerning because where is Bitcoin currently sitting? Well, we're sitting at 30,000, the macro trigger. What was the biggest crash we've seen from a macro trigger before? It was over here. We saw about a 14% correction from the macro trigger. A 14% correction from the current macro trigger at $13,000. If we go at $30,000, where would that put us? That would put us into the 25.2 to 24.2 range. So historically, not too bad. But if that correction, which could occur, takes us lower than 24,000, we would technically be seeing something we haven't seen before according to the 4-year cycle in terms of rejections from yearly lows. That could actually push the price lower. That could delay the bull market. That could put a twist on things. And I've been saying this entire time. The bottom is in. According to the current data, the bottom is in. For the bottom to not be in, we need the macroeconomic drivers of price action to change. If we take a look at macro drivers, okay, what actually drives price action? Drivers of price action. We have economic, we have political, we have social. The main one, obviously, being economic, and political kind of ties into economic because based on policies can either speed up or slow down economic decisions. But the main driver is still economic. And the main one for risk assets is, of course, interest rates. Now, interest rates are very important because they drive systematic risk. They drive perceived systematic risk. So, as long as the trajectory of interest rates, and this is interest rates, this is a 0 point, right? Positive interest rates, negative interest rates, they were rising. they've come down, okay? They're coming down, okay? And they're kind of plateauing. And this isn't the total interest rate. This is the monthly change. This is monthly change, monthly percentage change, okay? In relation to the prior month, meaning we had 50, 50, 75, 75, 50, 20, okay? The trajectory is moving towards a pivot, okay? If this trajectory changes before we reach that pivot point, which we're at baseline 25 now, we're plateauing at 25, we could potentially see the prices go much lower. Here's the thing, until that happens, the trajectory is still very much down. And as long as that trajectory remains down, systematic or perceived systematic risk is going to be falling, and therefore the asset prices are going to rise on the higher time frame and the bottom is in. This is why a CPI data is important. Because the CPI data comes out poor, this is a leading indicator for what interest rates could do. And if CPI comes out really bad, we could see interest rates actually pivot upwards. If it pivots upwards, well, the trajectory in which systematic risk has been perceived to be developing around completely changes. And therefore the risk in the market for risk assets completely change and asset prices will fall, okay? So we are looking at this data as leading information of what the market is going to do. Do not listen to what they say. Don't listen to the Federal Reserve say, don't listen to what the government say, or tell you shit. They are designed to profit off you. Information is free for a reason, guys. They want to take your money. They want you to make bad decisions. They are misleading you. You as a public get the information last. If you listen to them, you're going to be late. Watch what they do. The reality is they are printing money. They started turning those printers back on. They're decreasing interest rates. They have to decrease interest rates because banks are failing. Watch what they do. If they change their narrative again, we know what is coming. We can prepare. We can expect to what happens. Let's get into a short-term price action, guys. Really, really simply, guys. We break 26,800 to 27,000. That is what we expect the trigger to be for a move to 25.2 to 24,024. If that doesn't happen, doesn't happen. It is what it is. Until then, we are in a horizontal consolidation in this range, meaning bulls and bears are fighting for control. We have this weakness developing on the higher time frame, and the reason we have weakness developing on the higher time frame is because we had a surge of price action followed by consolidation. So when we now average that out, okay, it averages out like that, and this curvature is expressed weakness. It is expressed weakness. It doesn't mean we have actual weakness. It is expressed weakness because indicators smooth out based on historical range data. So we have weakness in the chart because we went from a period of high volatility to a period of low volatility, and that is expressed as weakness on the chart. So it doesn't necessarily mean we're not going to get above 30,000, but what it does mean is the bears don't have full control yet. They don't have full control yet. We have control for the bears if 26,800 is lost. Lose that, the bears get control until this range. Lose 24.4, the bears get control on the weekly. So under here, bears control on the daily. Under here, bears control on the weekly. Okay, vice versa. Above this level here, bulls take control on the weekly to monthly. The bulls already have control on the daily to weekly, okay? They get control to the weekly to monthly above 30,000. Now we know that we're going to push above 30,000 if we get that RSI trigger. Watch the RSI trigger, watch the break. That will push the prices higher. On the short term, if we see that diagonal trend line right over here break, that is going to be a good bit of information to tell us the price is going to go higher to 30,000, potentially 30,100, guys. Until then, trade the trend, trade the moves, but do not sit here and say, this is 100% going to happen and put all your eggs in one basket. No, even me, I'm in and out of trades. I jump in, I see bearish consolidation, I take short, I jump out, I sell my shorts for profit, okay? Over here, exactly the same thing. Over here, I'm jumping in longs, I'm jumping in and out of different trades in different directions while we're in these consolidations. I'm not sitting here holding my spot bags with $16,500 like an absolute chump. No, I took it 16,500, I sold at 30,000, made 88%. I wait now for confirmation for a breakdown or a push higher. I re-enter or I look for entries lower. I'm not going to sit here like a chump holding my egg baskets or basket of eggs, waiting and hoping for the best. Take initiative, take action, learn how to trade, learn TA if you want the best results. Otherwise, you are nothing more than sitting duck, waiting for a big whale or extra liquidity to come take that money off you, because that's all you literally are going to be if you have no plan, if you have no action, if you have no experience, if you have no knowledge. Focus on what you're doing. Do not sit there blindly and hope for the best. The market doesn't have any time for your hopes, and you'll find out very soon it's not going to work out very well for you if you just sit there and hope. So look at the data, look at the charts. Let's take a look at the smaller time frame. 5 to 10 minute chart, hourly chart, what is happening? Obviously, pretty strong with rejection. Congratulations, we've got shorts on these levels. Congratulations, we've got shorts on these levels. Congratulations if you even got shorts over here. We pushed downwards. We saw obviously a nice strong move toward the downside. I do not expect this downtrend to continue until $28,000 lost. $28,000 is going to be a huge level of support. If we do lose $28,000, we are going to continue downwards. Now, I did already say up over here a few days ago, if we approach and push into 28,000, I do not believe we're going to hold it. I do believe we're going to come down. The data would reflect that. It would, by saying that, what I mean by, as I think if we push into 28,000, we have a higher probability of reaching here first than we do breaking back above here. Okay, I'm going to end the video. Went for a bit long. I hope you enjoyed. I hope you learned something. If you have any questions, leave them down below. And have a great day, guys. I'll see you tomorrow.